Hi guys. So today I'm going to share with you the analysis of CMA Inter Financial Accounting question paper. In my point of view, so the paper is so easy, and I hope all of you done very well in the public examination. So let us continue with the analysis of the question paper. So first we know that the section A is a compulsory question and which is having 15 MCQs, and each MCQ is having a weightage of 2 marks. And the MCQs are also direct questions only, and no twisting is there in the MCQs also. So the first question is related to MCQ 1 is related to journal chapter, that is based on the accounting equation approach. So that is assets minus liabilities is equal to capital. So that is the simple one only. So and next so they have given an MCQ from cash book chapter. So what kind of balance the cash in hand account is going to be having. So that is covered from cash book. This is also a basic MCQ only. And next one, fundamental accounting assumptions. Actually this concept we are going to have in, so it will be covered in two areas. One is AS1, so disclosure of accounting policies, and also accounting and introduction. So accounting and introduction chapter we have already covered what are the fundamental accounting assumptions, all these concepts and all. So this is also the basic question only. And next one is based on the theory part from the rectification of errors. So if you have gone through the theory part of the rectification of errors, then you can able to answer this question also. This is also the basic question only. And next, coming to the MCQ number 5, which is related to final accounts or preparation of financial statements of commercial organizations in case of sole proprietor. So based on the trading account format, they have given the question. So here they are asking you to calculate the sales sum. So they have given every information: opening stock, purchase is not given, cost of goods sold given, and the closing stock, direct expense, gross profit, everything is given. So we are required to calculate the sales. Actually the simple formula for gross profit is sales minus cost of goods sold. So sales minus cost of goods sold is equal to GP. So when GP is given and cost of goods sold are given, directly you can calculate the sales also. Okay. So that is the basic simple question only. Next question, MCQ number 6 is related to BRS. So they are asking you to calculate whether how much amount is to be added. So see here they are not asking you to whether it is to be added or deducted. They are only saying that this much amount is to be added and how much amount is to be added to get the balance as per the passbook. Okay, this is also the basic question only. Basic adjustment from BRS only. Next so MCQ number 7 is related to depreciation. They are asking you to calculate the profit or loss on sale of the asset. So that we should calculate. So it is also the basic question. And so then MCQ number 8 is related to bills of exchange. So we are asking you, after renewal of the bill, how much amount is we are going to draw the fresh bill. So what is the value of the renewed bill they are asking. So this is also the basic question only. And next this is what the somewhat typical MCQ. So actually nowhere this MCQ was covered in the institute sources. So this we should answer carefully. And next operating lease is a, so actually this is also a MCQ which is given from the study material, direct study material MCQ this one is. And next one, so actually it is related to AS19, and previous one is related to partnership accounts. So partnership accounts. And next one, so MCQ number 11 is related to state which of the following statement is false. So actually this question is related to insurance claims. Okay. So if you have gone through the theory related to insurance claims, then you can comfortably answer this MCQ. And next one is partnership. So in the partnership, they are asking you to calculate the gaining ratio. So what is the gaining ratio of the partners when your partner is going to retire? So if you are comfortable in solving the ratios, then this is a very easy question only. Or by applying the partnership provisions also, we can able to answer this question. So this is also the basic MCQ only. And coming to next one is the departmental accounts. So in departmental accounts, they are asking you to calculate how much amount of stock reserve is to be created on the closing stock. So these kind of MCQs what we have discussed so far, all these MCQs are covered in our MCQ material. So except this one. So actually this MCQ is not covered nowhere. So nowhere in the institute source. And also this is a direct study material MCQ. And remaining all other MCQs are almost we have covered in our MCQ material. So if you have really gone through the MCQ material which is released by the masterminds, then you can so at least to score 20 to 25 marks from these MCQs. And next one, so this is also an MCQ which is covered in our so MCQ material. This is related to non-profit organizations. And next one, contingent liabilities treatment they are asking. This is also so the question which is related to final accounts, or it is also covered under accounting and introduction. Okay. So these are the MCQs. So actually they are giving 2 marks. So there are some MCQs which are given in such a way that they are not even going to take even less than 10 seconds also. So such kind of MCQs are also given for 2 marks. So in my point of view, the MCQs are so easy when compared to the previous 2 attempts, and this is an easy attempt only. So when I am going to compare with the previous 2 attempts. So this is the part related to MCQs, and next coming to section B, and you know that in section B out of 7 questions we are required to answer 5 questions. So and the question number 2 is related to foundation related chapters only. So 2A is related to depreciation and 2B is related to so rectification. So I have already mentioned you in my so day before strategy also, in each and every examination they are giving a question from rectification. So be thorough with the rectification chapter, and in the rectification chapter they have given, so sorry, first we are going to consider the depreciation. So depreciation chapter they have given the closing value of the asset. Some typical adjustments are given in this depreciation chapter. They have given the closing value of the asset, and some asset is added in the current year, some asset is disposed in the current year, but they have not given the opening value of the asset. So first we should find out the opening value of the asset, and next we should calculate the total depreciation to be charged to the P&L. Such kind of typical adjustments are given in this question. Actually this is nowhere covered in our study material or institute sources. Actually this question was given from the source from Tulsi and other book. They have given this question. See, the foundation areas they are going to make some twist in the problem. So in such a way they are asking the questions from the foundation level chapters. And next one is related to rectification. So here they have given you the question. So in the current year the trial balance is not going to tally, so the difference they have transferred to suspense account, and they are asking you to write the rectification entries in the next accounting period. That means this is the third stage of rectification. So that is rectification of errors after preparation of final accounts. Okay, so that you should carefully observe in the that you should carefully observe while writing the question. Next, so they are asking you to write the journal entries to rectify the errors, and also they are asking you to prepare the suspense account also. Okay. Next, question number 3A is related to consignment. So these kind of questions we have already covered in our MM material. So in this question, the twist is related to the calculation of commission. Okay. So but this kind of commission calculation problem is there in our CRD2 problem also. So the commission, the consignee is entitled for a commission of 5% on the total sales plus 1/4 of the amount by which the gross sale proceeds less total commission thereon exceeded the invoice price. So in our problem, so the gross sale proceeds less total commission exceeding this much value, like that some value we have given, but here they are saying the invoice price. So this kind of adjustments, and majority of the adjustments which are there in this problem are covered in our material. So in this problem what they have given in the exam, so they are taking some typical adjustments from the so multiple problems, and they are giving as a question in the public examination. Okay, so that too in case of foundation related chapters only, and interrelated chapters, so exclusive interrelated chapters they are asking direct questions only, but the foundation chapters they are making some twist, and so the twisted points they are giving in the so question. Next, after question number 3A, next we are having question number 3B, so which is related to hire purchase, and this is a direct study material question, and which is also covered as CRD1 in our MM material. So even amounts are also not changed. This is a direct question given in the examination, and this is such an easy question given for 7 marks. Okay, and next, so in the single entry chapter, so that is accounts from preparation of financial statements from incomplete records. So here this time in every attempt generally they are going to ask so conversion method, a problem from conversion method, but in this attempt they have given the question based on capital comparison method. So this kind of problems already we have covered in our material. So I think CRD2 and assignment 2. So after solving these two problems, you can comfortably answer this question. So this is a question given from single entry and which is given for 14 marks. Actually, in every attempt, they are going to give the question from the single entry chapter based on the conversion method for 14 marks. But this time they have given the question so based on the capital comparison method for 14 marks. Okay. And next one coming to the partnership accounts. So here no typical adjustments are there in the partnership accounts, only the valuation of goodwill. Actually, there is a separate question based on the valuation of goodwill under the super profits method. So whatever the adjustments we are going to have in that valuation of goodwill problem, those adjustments are included in this problem, and they have given the normal adjustments only related to the remaining points. So the point number 1 and point number 2 and point number 3. So these are the points which are, and point number 4. So these are the points which are related to calculation of goodwill. So instead of giving the goodwill value directly in the question, so they are asking you to calculate the value of goodwill by applying the super profits method. So first of all, for solving this question, we should know, so what are the different methods we are having for valuation of goodwill. So actually this kind of adjustments problem we have already discussed in our marathon session also. And here in this question, one more point that we should observe is that is here they are asking you to prepare the memorandum revaluation account. So the value of assets and liabilities are not to be altered. That means they are asking you to prepare the memorandum revaluation account. So see how they have inserted this point. So they have inserted this point in between all the points. So that means there is a chance of skipping the there is a chance of doing the problem in the normal way. So thereby the students will strike off this, and they are trying to waste the time of the students. So thereby they have inserted this point in middle of the points. So here we have to solve this problem by preparing memorandum revaluation account. So first of all, what we will do, generally we will prepare revaluation account and we will transfer the profit or loss to the partners capitals. But later on we will realize, so it is not the normal revaluation account, it is to be memorandum revaluation account. So that is the point that we should observe. And next one, so question number 6A is related to branch accounts, and in every attempt they are giving a question from branch accounts. So last time they have given from wholesale price method, and this time they have given the question based on the stock and debtors method. So most of the times they are going to test a question in the branch accounts either based on the debtors method or stock and debtors method. So this time they have given the question based on stock and debtors method. And these kind of problems are there in our material. So it is the question which is exactly similar to our assignment number 6 problem. And next, so coming to the next question number 6B, so it is insurance claims. So insurance claims. So under insurance claims, they are asking a question which is based on the loss of profits method. So under loss of profits, how to calculate the claim amount. So if you are thorough with the whatever the steps we are having, that is step number 1 to step number 8. So step number 1 is calculation of short sales, and finally up to step number 8 we are going to calculate the claim amount. If you are be thorough with the format what we have discussed, so directly inserting the points which are given here in the format only. So no additional calculations are also required. So direct information they are giving, and you should just remember the format of calculation of those 8 steps, and simply you can apply those 8 steps. Then you can easily comfortably answer this question also. Okay. So this is also the question which is given from, I think this question was covered under CA Inter Study Material, old syllabus. So here the additional points in this question is they have given the trend percentage, and also they have given the adjustment to the GP rate. Actually in the step number 3 we are going to calculate the GP percentage. So that is net profit divided by, net profit plus insured standing charges divided by last year turnover into 100. After calculating that GP, so we should add additional 2% for consideration of GP percentage. So that is the adjustment that we should have to consider for GP calculation, and also we should consider the trend percentage given in the question. Next one, so question number 7A, so it is a question from AS1, so that is disclosure of accounting policies. So whatever the policies which are followed by the management, that policies should be disclosed. So that is a direct question which is given in our material also, and also we are having in this question in the study material also. So this is a direct question given from the accounting standards. So that is from AS1. And next one, question number 2, 7B. So it is also related to so accounting standard number 10 AS10 PPE. So actually they have given a question based on the theory part. So what is the objective of AS10? So that is a accounting treatment of so property, plant and equipment, and also they are asking you the what is a bearer plant and what are included in the bearer plants and what are not included in the bearer plants. So this is a question given from theory part. And if you see in our MM material, we have given the short answer type questions at the end of the material. So in those short answer type questions, we have covered these so theory questions also. Those who have gone through those short answer type questions, those people can able to answer this question. Or if you have gone through the AS10 revision, so then also you can comfortably answer this question. So the twisting point is here. So majority of the questions from the standard they have tested based on the theory part, but not based on the problematic part. And next, coming to question number 8A, here also they have given a question based on AS12, which is related to presentation of government grants. So there are two types of presentations by applying either capital approach or revenue approach, income approach. So that is based on the theory part. They have given a question for 5 marks. See, accounting standards are also going to have so around 7 marks and 7 marks and 5 marks totally. So 19 marks, and in MCQs we are having 1 mark. So they are asking at least 20 marks from the accounting standards also. And next, coming to the final accounts chapter. So already I have mentioned in the day before strategy that be thorough with the treatment of provision for bad debts account. In each and every attempt they are asking a particular question from the treatment of provision for bad debts. And next, in partnership 2, so they have given a theory question which is based on so what do you mean by the piecemeal distribution. So based on the concept what you are having, you can able to answer this question. So this is what the question paper of financial accounting. So, and I think my point of view, this paper is so easy, and if you are if you are perfect in your revision, so I can confidently say that you can get the exemption in this paper. Okay, so thank you, ma, and all the best for your upcoming exams.